Asian markets took a tumble today. This followed the release of the Chinese manufacturing index, which declined to a 5-month low. This on the back of China shutting key economic cities like Shanghai and 2 other small industrial cities as it battled to combat a resurgence in coronavirus cases. Again, negative sentiment around the Russia-Ukraine conflict also taking hold. Over in Japan, the Nikkei share average declined by 0.73%. In Hong Kong, the Hang Seng index lost 1.06% at the close, while in mainland China, the Shanghai Composite Index ended by 0.44% into the red. All right, let's take a look at the general indicators. Okay, let's get into the markets picture with Jones Gondo. He's a senior research analyst at Nedbank CIB. Thanks very much, Jones, for joining us. So apparently United States markets stumbled partly on the back of the lower than expected 6.9% growth print. That's for the fourth quarter of 2021. But surely that's nothing to really sniff at.
No, it's nothing to sniff at. I think the big picture here is that the US economy is still growing really strong. I mean, you can just compare 6.9% to South Africa is hardly ever able to get above 2% on a sustainable basis. But I think, more to it is that the market was expecting 7% and they got 6.9%. And the real fear that the markets have is that inflation or CPI is running much higher, closer to 8%. And so in the end, it's a case of saying, when you miss a target on growth, does that indicate a more longer-term problem of slowing growth, rising unemployment, high inflation, or stagflation risk creeping into the US economy?
Well, speaking about the second largest economy in the world, that is China, its containment of the coronavirus has really crimped its manufacturing activity. We know that's the manufacturing hub of the world. How concerned are markets about this, or is it seen as just a blip because of the coronavirus situation?
Well, look, I think China is having a variant that we all experienced and was really deadly for us. We had huge lockdowns or long and extended lockdowns at home and abroad. So I think the thinking here is that this could be a very long haul of lockdowns in China, and that will definitely affect supply chains, which could be inflationary for all of us, and it's really slow global growth as well.
When you look at our local market, it does seem to have followed the Asian markets downwards, but what do you see as the key drivers? What are the things that stand out for you today?
I think it's the point you made earlier that their manufacturing data came out and it's in contraction territory. Obviously, in response to these lockdowns, that you would expect that there was a contraction month on month, and I think that's feeds into South African sentiment, given that we have strong trade ties with China. And we also export a lot into China. And so I think that just translates via the trade channel.
Yeah. And still with that theme, globally speaking, tomorrow is a new month, and that's when we get all the data, the global data around manufacturing around the world. We know that there's pressure around inflation, higher inflation. We saw that in prints that came out from Europe yesterday, 8%, 7%, and so on and so forth. And then, of course, there's also the Russian-Ukraine war and supply chain constraints. How will this all feed into the data, do you anticipate?
Yeah, look, I think it's inflationary pressures everywhere and a few years of slowing growth. I think on the first part, you mentioned, the Eurozone area, they've got direct exposure to the Russia-Ukraine situation and supply chain issues there. It's really impacting on energy and food prices. But I think generally in terms of, PPIs or inflation indicators at the factory gate level across the world, we should see either marginal reductions in orders, so that's the quantity side, and or inflation, so the prices of manufactured goods starting to climb because of these frictions in supply chains.
Jones, thank you very much for your time and your insights there. That was Jones Gondo. He's a senior research analyst at Nedbank CIB.